Kyle Sonlin and Herwig Konings are founding partners of Security Token Group. All opinions expressed by them or guests on this podcast are solely their opinions and do not represent the views of Security Token Group or its subsidiaries. You should not take any opinion expressed on the show as a specific inducement to make a particular investment or follow any investment strategy. This podcast is for informational purposes only.
Hello everyone, thanks for tuning into this week's episode of the Security Token Show. We're coming to you from our studio here in sunny Miami, Florida. I'm your host, Kyle Sonlin, and I'm joined by my co-host and business partner, Herwig Konings.
Glad to be here.
And now, before we get started, we do need to share a word from our sponsor. And this week's episode of the Security Token Show is sponsored by the Fair Islands Distillery. The company is launching an exclusive whiskey and gin distillery in the remote Faroe Islands, which provides the optimal environment for whiskey maturation, which accounts for 70 to 80% of the flavor. And it has different gin botanicals that are specific for those islands, which creates exotic flavor profiles for collectors and connoisseurs to enjoy. Now, distilleries require significant upfront costs to create the product, so the firm is selling equity via a security token offering for the opportunity. On top of the $700,000 crowdfund that they raised last year, the firm is now selling an additional 23% of the company through a security token offering that also includes annual dividends once the liquor has been produced and sold, which they're expecting to be around 2025. If you want to learn more about this innovative product, learn more at fair.io. That's FAER.io to learn more.
As always, thank you to our sponsors for making this show possible. And for those of you who are tuning in for the first time, welcome and thank you for those of you who are coming back. For those of you who are new, I'll let you know that we have a heck of a show coming up for you today. We're going to start off with our companies of the week, where Kyle and I, we each pick one company where we think they did the biggest moves in the space last week. Then we followed up with the top 5 things that you need to know that happened in the space last week. Followed with some more industry news, some security token market updates, and our main topic discussion this week's, which is the different types of crowdfunding portals that you're going to get to know about. So I'm excited. I want to know more about Kyle's company of the week, though, before we get into all of this.
So my company of the week is a company that they're dubbing themselves the Robin Hood of real estate. This is NYCE. And so they are building a real estate investment company that's going to be creating fractional investment opportunities for investors to participate in the real estate sector. They're focusing on creating more wealth equality by allowing people to invest as little as $10 into fractionalized U.S. real estate, as well as potentially internationally one day. They're my company of the week this week because not only have they raised over $1 million through a Reg CF deal, they're now going to be doing a tokenized Reg A+. They're raising $18 million through the T0 platform, presumably to trade once they're successful in the fundraise. They've got a lot of heavy hitters behind them. It's a really exciting deal. We're certainly going to cover more terms in my STO section later in the episode, but I had to give them a huge shout out for their forward thinking. They've been successful in fundraising, and they're bringing some cool products to market.
Big deal, NYC. I love that, making it possible for anyone for as little as $10 with some great partners involved like T0 and a Reg A Plus to boot. That's a big deal, not an easy accomplishment. That's very exciting stuff. Great choice, Kyle.
Not to mention they're selling a couple fractionalized properties in Philly, where I'm from, Philadelphia, so you love to see that.
That's why they want it. There it is. There it is.
How about you, Herwig?
I want to tell everybody about Chaka, which is the first digital securities trading platform in Nigeria. Wow. So congratulations to Chaka there. They were approved by the Nigerian SEC, Securities and Exchange Commission there, which means they can now operate a sub-broker to trade local companies, be a digital platform for buyers and sellers in Nigeria. There is no sign of when they're about to launch, they say. But of course, it's a huge honor for the company, and it's a great feat, and it's a validation for where the industry is headed. Lots of other countries in Africa are also following suit, and now Nigeria has joined them thanks to Chaka. So congratulations to them.
Security tokens are a global phenomenon. It's exciting to see everyone getting involved and bringing a more democratic opportunity for investment vehicles worldwide.
And with that, let's get into the top 5.
Let's do it.
Starting off with our top five, the first thing that you need to know is news from HQLAX, which announces their $15 million Series B financing. And previously, they had some pretty incredible backers. Goldman Sachs, BNY Mellon, BNP Paribas, Citigroup, the Deutsche Börse Group, the National Stock Exchange of Germany. But now they can count one of the world's largest U.S. banks on their cap table, JP Morgan. And on top of that, JP Morgan said that they're going to take their agency lending solution and take it to HQLX's collateral management solution using blockchain technology. It's pure validation for the industry that all the major big banks, they're getting into security tokens. Actually, funny enough, our main topic from last week.
You love to see it. And moving into number two, we've got Digital Assets AG. And they're working on a tokenization solution for tokenized stocks. We've covered these over the last couple of months now as FTX and Binance have launched derivative shares of public market stocks. These have become very popular in the crypto space, but they've come under some scrutiny because you don't actually own the underlying stock, and a lot of regulators around the world are questioning whether they're able to do this compliantly. Well, with Digital Assets AG, they're at least trying to solve the first half of the issues here in terms of creating free-flowing security tokens that investors can buy and self-custody, as well as potentially trade on other platforms using the Solana blockchain. This is a very fascinating development and may push this industry forward and provide even more legitimacy for the tokenized stock space.
Definitely another major potential innovation in the tokenized stock space. I absolutely agree between FTX, Solana, and Digital Assets AG there. Wow. Number three, we have the Swiss Central Bank telling us that they will not be bringing a solution, a tokenized Swiss franc, anytime soon to the markets. Obviously, they've been very active. We talked about it last week. They did an experiment with the French Central Bank to settle securities using their blockchain technology and distributed ledger technology. And on top of that, we know that they have active trials that they've been exploring, Project Helvetica and many others. But they wanted to be clear. They are not bringing anything to the production level. They're exploring wholesale and consumer capabilities, and they're certainly not writing them off either, as that could also be a risk for them.
And moving into number four, we have Nihon Unisys, who's launching a security token platform. This is a Japanese platform here, and they're looking to work on Ethereum and offer compliant securities. Focusing on launching a platform sometime in the spring of 2022, they're excited to get involved. As a member of the Japan Security Token Association, they're involved in the ecosystem and excited to launch a product in the space, but they haven't given us a ton of details on what that might look like, so we're going to keep our eyes peeled. But great to see Japan as another ballooning emerging industry for the security token space.
It's a red hot. In fact, I wrote an article on this, the rise of the security token scene in Japan. You can check that out on the Security Token Market blog. And finally, number five, it's all about Binance. This time, not such great news as Binance has officially been banned from the UK to operate. So this is specifically in regards to a lot of their tokenized stocks trading, which again, just as you pointed out in number two with FTX, many regulators have seen scrutiny around this. And now Binance has officially pushed those limits and is no longer allowed to actively operate in the UK. In fact, the regulators say that it was in train for some time. So not surprising there. What do you think, Kyle?
It's interesting. It's been fascinating to see how Binance has been the focus of a lot of this scrutiny. We see Canada focusing on this. They actually also banned Binance. Binance has launched a bunch of separate different companies. Binance US, I think Binance Markets Limited or something like that is where they're operating in the UK. And there's a couple different companies and they're trying to stay out of the regulatory controls. But trading security tokens, trading real world securities is an issue, and they haven't been very transparent in that space yet.
Let's see what they do next. Maybe a Binance UK to suit. Who knows? We'll see. Meanwhile, let's get into the rest of the industry news. And kicking things off this week in the news, we have an article in Bloomberg Law featuring a statement from Federal Reserve Vice Chair of Supervision Randall Quarles, who expressed caution regarding a digital dollar in the U.S. by the Fed, otherwise known as a CBDC or central bank digital currency. Quarles says, quote, a Federal Reserve CBDC could pose significant and concrete risks, and that is the potential to remove commercial banks as the dominant provider of money to the public. This constricts the availability of credit and at the same time potentially fundamentally alters the economy, end quote. And I think that's a serious statement from a top Fed official about the digital dollar, which is being explored by the Fed. And meanwhile, China already has rolled out a CBDC across its own country, putting potential pressure on the US itself. And next up, we have LiquidShare, which is a French security token startup with backers like Societe Generale, BNP Paribas, Euronext, and Euroclear, amongst others. Well, I think it's worth noting with investors like these that their decision to leverage digital assets, DAML, smart contracts on the Ethereum-based Hyperledger blockchain Besu should not go unnoticed. The CEO says it will allow the company accelerated time to market, and this is a big validation for the DAML smart contract language. And we saw increased adoption by Algorand as well with Copper, a custody platform out of the UK that will now support Algo tokens, the native token of Algorand, as well as Algo-based issued tokens, including security tokens on Algorand as well. This means Copper can now be a suitable custody solution for security token platforms, issuers, and investors. And to end on our resources and opinion section, we start off with the 22nd edition of Tokenize This by Peter Gaffney, who covers the use case of tokenizing private credit. Simply put, you can get exposure to lending platforms' revenues through the spread they make if they make a security token. And that's a truly fantastic example of tokenization in capital markets. If this did pique your curiosity, I would definitely recommend giving this a full read on the stomarket.com blog. And we also saw a feature in the Bankless Times for Prometheum, a security token issuance platform. And in the article, CEO Aaron Kaplan talks about how public market infrastructure will be improved with the blockchain and more, which is actually a topic that we covered on the show in episode 79 if you're interested. And on CoinDesk, we saw a big statement from Janine Yorio, who titled the article, "Security tokens are back, and this time it's real." And that hits home for me, I gotta say. She cites the recent successful Exodus STO, infrastructure improvements, and regulatory changes, all as reasons for an impending security token industry boom. And that's everything you need to know from last week. Let's head over to Kyle and get the latest security token market updates.
In the new STOs segment, we only have one offering to cover, and that's from my company of the week, NYCE. NYCE is a real estate crowdfunding platform who has announced a tokenized Reg A Plus deal through the T0 platform. NYCE is going to be selling $18 million in equity of its platform to retail US investors. NYCE closed its Reg CF campaign in October 2020, where they were able to raise the full $1 million in gross proceeds on WeFunder and Republic. But according to the press release, they actually set the record for the fastest real estate company to raise $1 million through a Reg CF offering. The company is endorsed by professional soccer player Martin Braithwaite and actor and entrepreneur Philip Michael to empower greater access to real estate investing. The firm is going to be selling equity in the platform and will eventually offer tokenized investment products to investors. There's no information on the company's valuation or blockchain of choice yet, but I will keep you posted as I hear more. I know that they're only doing 18 million, and remember, they can do up to 50 through Reg A+, but I guess 18 is going to do the job. And moving into the market update segment, I want to kick it off with a shout out to Crowdfund Insider's Omar Faridi, who created yet another great report on the security token trading market. He cited and published security token market data and gives great coverage of the industry. So thanks again for your consistent support, Omar. Definitely check out that article on Crowdfund Insider. Turning our attention to the trading market this week, it's headlined by a market cap of $787 million, which is nearing the all-time high, which was set this month right around that $800 million mark. We had a few headliners, including Mount Pelerin's tokenized equity trading on Uniswap, which was up 28% this week. The shares are currently at a nearly 2% adjusted liquidity rate, which is not bad for the industry and shows that the move upward is legit. Other big gainers were many of the realty properties, with 4 seeing double-digit returns this week and an additional 40 more finishing in the black. Our largest market cap tokens like T0 and Overstock and BCAP really didn't see much movement this week, but we also continue to see incredibly strong movement on the tokenized stock front. 27 of the highest 30 trading volume assets traded here were tokenized stocks. And it was another week led by the tokenized Grayscale Bitcoin Trust shares. With over 2 million in trading volume this week alone, GBTC saw double the volume of second place, which was NIO, an electric vehicle manufacturer. From there, we saw some familiar faces like Coinbase and Tesla and GameStop to round out the top 5, which is pretty relevant because it's tangential to the security token space, but important to mention. And that's that Robinhood was just fined the largest penalty ever issued by FINRA for misleading investors and its system outage related to the GameStop stock crisis from March. If you missed our episode on how security tokens can prevent crises like this from happening, it's definitely worth checking that one out. But it does just prove the issues that we're having in the traditional trading environment. In a 24/7 world, we should absolutely have real-time markets and, quite frankly, many different listing exchanges to prevent concentration risk like this. Robinhood is so dependent on the other players down the stream because, quite frankly, those players have a monopoly on the capital markets. If we had multiple exchanges and multiple providers worldwide that could provide trading services for these assets, there would be a much more competitive and innovative market, but also operational risks of trading are drastically reduced. You just can't help but feel that this is the future of trading. But that's it for the market trading segment this week. Now it's time to move into our main topic. Let's take it away.
And moving into our main topic, we're going to be covering the different types of crowdfunding portals. And over the last decade, we've seen a lot of developments in that space, starting off with rewards platforms like Kickstarter. You may have heard of this before, and they were really innovative in creating an internet platform that allowed anyone to come in and invest in their most exciting projects, things that they saw the vision for and wanted to participate, usually very small checks from consumers that were able to fund a product that would be able to come to launch. It's a very exciting platform, but I think it left some investors a little bit hard done when they didn't quite see the fruits of their investment.
Yeah, that's right. I mean, typically what would happen is the creator would go ahead and say, based on how much you give me, you get a certain reward. And you get a specific reward, typically like a t-shirt, or if you're backing a product that's being developed, you might get an early version of it. This is exactly what happened with a little known virtual reality company called Oculus. Oculus actually leveraged Kickstarter to go ahead and raise their initial funding to launch and develop the Oculus Rift. Now, of course, this was such a successful product, and many of the backers were happy receiving a t-shirt and receiving an early version of the product. That's what they were expecting. What they weren't expecting was for very quickly, shortly afterwards, Oculus to sell to Facebook for $2 billion. Now, a lot of these backers were kind of up in arms saying, wow, we just backed you and now you just sold to Facebook and we get nothing out of it. And that was a big problem. That's actually what I think led to the next sort of generation, which was where equity crowdfunding came along. And that actually wasn't even possible up until 2012, where Congress had to pass legal legislation to make this all possible. And so that's where we saw the rise of equity crowdfunding. However, equity crowdfunding, I think, had its own flaws, right? You did now get shares in a company, but Oculus Rift would still have to sell to another company or eventually IPO for the backers or the investors in this case to actually make a return. And I think that's, Kyle, where we may have saw the innovation of ICOs take place.
Yeah, there are a lot of people that wanted to invest in these things, but you might have made a bunch of investments on an equity crowdfunding portal and then just been stuck there with illiquid shares that weren't going to go anywhere unless they got acquired, as you said, or IPO'd or something like that. But for the most part, a lot of these investors probably just sat on equity forever. Even if it appreciated over time, they had no way to get liquidity on it. And so as we saw the developments in the ICO space, it was very different. They offered this opportunity for investors to be able to buy into a project, contribute early, and get liquid assets back in return that they could then buy or sell in the secondary market, creating a kind of a speculation perspective here. But again, even that wasn't a full, complete picture, because a lot of investors, in the same way as with the Kickstarter example, were looking to invest and back these early projects and very quickly realized that the crypto or the utility tokens that they received in return for their investment really didn't represent the underlying equity of the platform at all. They really didn't have any rights or protections in any case, and they were just getting essentially pre-sold revenue that then they could sell to other people. It was an incomplete picture.
Does that sound familiar, folks, to our Oculus Kickstarter analogy, right? And that's, I think, exactly why security tokens came into fruition, because people saw the potential of ICOs. They wanted to be able to participate, but unfortunately they didn't get what they really wanted, which was true exposure to the company. And now, thanks to security tokens, basically compliant versions of equity crowdfunding, enabling easily transferable capabilities of ownership, aka liquidity so that you can sell your shares to somebody else, whether it's through a secondary market or directly to somebody else. This technology makes it possible. Before, with equity crowdfunding, it was too difficult for a company to manually manage this process. And when it came to ICOs, it was actually either illegal to enable these capabilities or they simply didn't offer investors what they wanted.
And remember that with an equity crowdfunding platform, whether it's an equity crowdfunding or a security token platform, you are talking about securities. So these platforms need to follow very specific securities laws, not only about how they bring on investors, but the platforms themselves need to follow regulations. They need to file as a crowdfunding platform and follow those disclosure and requirements in order to operate that way. So part of the diligence that comes in as an investor here is not only making sure you're investing in the right deals and taking a look at what investments make sense for you, but also you need to make sure you're verifying that the crowdfunding platform or the security token crowdfunding platform you're working with is following the local regulations and jurisdictions, as well as making sure you're not getting hit too hard by the fees.
Absolutely. In many cases, they need to be licensed in order to act as an intermediary and offer these services on their platform. So definitely make sure that you are actually participating in a compliant offering in the first place. That's very, very important, beyond the additional due diligence that you're looking for. In fact, we believe that hundreds of these crowdfunding platforms are going to launch over the next few years all across the world, offering thousands of different types of investment opportunities across different industries. And they're going to focus on specific niches. You may want to go to another platform because they're focused on a specific real estate type of investment, putting in specific types of diligence procedures to make sure that the investments that they are offering to you are safe. Other platforms may be focused on, high scalable, risky startups that may have a huge chance of failure, but at the same time, they offer the similar levels of returns that ICO investors were looking for. We expect to see it all. Hopefully, this segment gave you a little bit of a better understanding of the different types of crowdfunding portals that exist. We do believe, maybe biased, so that security tokens are the future, though they, of course, all of these platforms still exist today in their own form. And of course, if you have any questions on this topic, please reach out to Kyle and I directly. We're happy to talk to you on LinkedIn or Twitter and answer your questions.
Absolutely. Thanks again for checking out the episode. We're live on YouTube for video. If you're listening, still a lot of you are listening on Spotify. You may like to see our faces here in some of the articles we cover throughout the episode. Or if not, you can listen on Spotify, Apple Music. We release these episodes Friday mornings. We also have our newsletter, What's Drippin', that comes out Monday that gives you the full digest of everything that's going on, as well as our Clubhouse speakeasy sessions that we cover the main topic and Q&A with industry leaders every Thursday afternoon.
Of course, and if you want to go check out stomarket.com, you can get the latest trading information on all security tokens. You can get the latest news at stomarket.com/news. And of course, you can check out amazing research reports by our team and blog and articles and information at the Security Token Market blog.
Thanks so much for listening. We'll talk to you next week.
Happy tokenizing.